Good day, students, and welcome to today's lesson. Today we will be having a lesson on the income statement and the adjustments to the income statement. Some key concepts that you need to know before we can start today's lesson will be the following. An income statement. An income statement is the nominal section of the trial balance that is now recorded into its own separate statement in order to calculate a net profit or loss. Gross profit. Gross profit is calculated by taking our net sales less our cost of sales. Net profit. Net profit is calculated by taking our gross operating income less our operating expenses plus our interest income and deducting our interest expense. And then lastly, adjustments. Adjustments are transactions that take place after the trial balance for the year end has been drawn up, but still affects the current financial year, and this has to be included in our calculations. In today's introduction, I want you to think back. Can you remember how we used the trial balance to complete our 8 steps at the year-end closing procedures to calculate a profit or loss? Can we now name these 8 steps together to revise? Great. So first off, our first step was in the trading account, we deduct debtors' allowances from sales to get our net sales amount. Step 2, in our trading account, we deduct our cost of sales from our net sales from step 1 in order to calculate a gross profit. In step 3, we have now calculated the gross profit in our trading account, and for step 4, we will transfer this gross profit from our trading account to our profit and loss account. In step 5, we will close off all our income accounts to the profit and loss account. In step 6, we will close off all our expenses to the profit and loss account. And then in step 7, we will calculate a net profit by deducting all of our expense accounts from our gross profit added to all of our income accounts. This will then give us a net profit. In step 8, we transfer the net profit or loss to the capital account. For today's lesson, we will be discussing the income statement. So in front of you right now, you can see a blank income statement, and this is most probably what you would see in your homework activities and in your tests and exams. So what you have to do is you have to fill in this income statement either from a trial balance or from your general ledger accounts, and you need to make the necessary adjustments that might happen, as I said, after our year-end accounts have already been pulled up. So this is the format of our income statement, and I'm going to explain to you now how this format works because it's something a bit different to what you've seen before. So first off, you'll see that we start with our revenue. So what is our revenue? Our revenue is our sales less our debtors' allowances, meaning any sales that were sent back or that were discounted, we have to deduct this from our sales, and this gives us our revenue. Next up, we have our cost of sales. So our cost of sales is the cost of sales balance that you see in front of you, and we will deduct any additional debtors allowance transactions that might have happened, because cost of sales is a cost that only occurs when we have a sale. So when a debtor has sent back a sale or when we have reduced the sale because of a return, then our cost of sales will also reduce. Right, the next step is then taking our revenue amount less our cost of sales to calculate our gross profit, such as in step 1 to 3 of our 8 steps for our year-end procedures. Next up, we have our other operating income. So our operating income can consist of anything such as rent income, commission income, and so forth. We add all of these incomes together and we write them in line items underneath the other operating income. We add that total balance together and we add it to the top of that column to give us the total for other operating income. We then look at our operating expenses. So operating expenses can be any number of things. It will depend on the company, right? So this can be our depreciation, our salaries and wages, rent expense, water and electricity, anything of that sort, right? So we add all of these expenses that are listed under our operating expenses, and we write the total of these expenses at the top of the block, there where it says operating expenses in that line item. Then we take our other operating income total at the top of the block, and we deduct our less operating expenses at the bottom, as well as do we add our gross profit, and this will equal or give us our operating profit, as you can see there. Right. Then our next step would be to add any other income from interest activities. So we have a separate note for interest income, and we will go through that in the next lesson. But for now, you just need to know that the total from that interest income note will be brought to our income statement, and that will then be put in the line item for other income note 1. Then in our interest expense note 2, this is also a separate note to the income statement where we will deal with all our interest expense costs, and the total from that note will be brought to the income statement as well. So what do? We take our operating profit that we just calculated, we add any interest income from note 1, then we deduct any interest expenses from note 2, and this will equal or give us our net profit before tax amount. Right. So for this current year, it's important to note that income tax will not be applicable for you to calculate or to do anything with for the current year right now. So this is probably a line item that you won't see again this year, right? So your format will go straight from net profit before tax or from net profit to transfer to owner's equity. Right. Then, if we look at, we are standing now at our net profit before tax. If our income tax is not applicable, then you will just have your net profit for the year after that. And then, let's say that our net profit for the year is R1,000,000, and the line item underneath that says transfer to owner's equity. So we would transfer this net profit of R1,000,000 then to owner's equity. So what would be left in our income statement is 0 then, right? So it's important to note that the last line item, transfer to owner's equity, we do not calculate something and then bring it to the income statement. Here is where we take the income statement and connect it to the statement of financial position, which you will learn about in a later lesson, by transferring this net profit or net loss to the capital account, right? And the capital account we will see in our owner's equity note in our statement of financial position. It's also important to note that if it is a profit, so meaning if our amount is in a positive, our income was more than our expenses, this would be added to our capital. So our owner would have an increased value. However, if this is a negative amount, meaning our expenses was more than our income, then this would be deducted from the capital and the owner's value in the business would decrease. Now I want you to have a look at this illustrative example with me. So in front of you, you can see a trial balance for ABC Traders as at 28 February 2025. We have some typical accounts here, such as sales, purchases, capital, drawings, rent expense, salary expense, electricity expense, insurance expense, bank, debtors, creditors, and inventory. So what I want you to specifically focus on is all the items that we see in front of us here that will have an effect on our income statement if we think back on our previous slide with the format, right? So obviously sales, capital, will have an effect only at the end when we transfer our net profit or loss, our rent expense, salaries, electricity, insurance expense, and then our debtors if there was a debtors allowance transaction, if someone sent something back, as well as our inventory, as this will help us to calculate cost of sales if it was not given. Right. On the next slide, we will look at our adjustments to be made. So I said to you that adjustments is something that can happen after this final trial balance has been drawn up, but it still affects our current financial year figures, and therefore it should be accounted for. So our adjustments that we see is number 1, the closing inventory is R30,000. So the adjustment that should come to mind there for you is our trading stock surplus or trading stock deficit, right? So if our inventory is a different amount in this adjustment than it is on our trial balance, there might be a surplus or a deficit for inventory, right? Surplus would be an income, deficit will be an expense. The second one is accrued electricity. So the word accrued indicates to us that this expense is due in the current financial year, but it has not yet been paid. So we know that this amount will increase our electricity expense for the year. And then number 3 is a prepaid insurance of 800 Rand. So prepaid means that we paid an expense that is not yet due, and therefore it would need to decrease our current year's expense of insurance. And the last one is depreciation. So normally you would have to calculate depreciation in your homework and your tests and exams. However, here we have given it to you to simplify this exercise. So the depreciation on equipment here is 5,000 Rand. And we know that depreciation is an expense that has to be recorded on our expenses. I listed some key points for you here. Closing inventory will affect your cost of sales. Accrued expenses will increase your expenses. Prepaid expenses will decrease your expenses. And remember that depreciation is a non-cash expense. So these notes are just to assist you with the adjustments that have to be made. Please note that in the test, I will not be giving you these notes, the additional key points. This is just for purpose of teaching and learning for today's lesson, as the focus is on the income statement and not necessarily the adjustments, as we have covered that in past lessons. On the next slide, I want you to look at the income statement that we have now completed together in class. And I want you to have a look at the memo for this, or the already completed version. I want you to compare it to your own income statement in front of you. And I want you to check if you have taken into account all the necessary requirements. So if you have a look here, you would see that our adjustments would have affected here with our closing inventory. It made an effect in our electricity expense. So you can see electricity expense was an accrued expense. So we had to add the 1,200 to the original 6,000 balance. The insurance expense was prepaid. So we had to deduct the 800 Rand from our original 4,800 expense. And depreciation has been added as a line item at the bottom of our expenses for 5,000. Here we can see that sales less cost of sales will give us our gross profit. We less our expenses to get us our net profit. Here there was no interest income or interest expense. As I said, we will be dealing with these two items in a separate lesson, as they are their own notes to the income statement. And here there was also no other operating income. And this is completely possible, as not all companies have a different stream of income than their sales. Lastly, I want to ask if there is any questions about the current topic. Right, so if there is no questions, I would like to just inform you about your assessment. So in the next period, you will have a theory test. So basically what the theory test would be is you will receive a blank income statement and a trial balance with the adjustments, and you will have to fill in that format that we have just spoken about and highlighted for you so nicely, as to what should go where, how we calculate net profit, how we calculate gross profit, how we calculate sales, how we calculate cost of sales, in what manner do we add and subtract on this format to get to our net profit at the end, as well as what do we do with that net profit. Right. So I hope this lesson was informative to you, and I'm happy to revise with anyone on Monday in our extra class if there's any additional questions that we did not have time for today.